Silver just smashed through $84.70. Let that sink in for a second. While the masses were distracted by meme coins and tech stocks, the most manipulated metal on planet Earth just pulled off a historic, face-melting rally. Half of YouTube is screaming that $100 silver is guaranteed by next week. They're telling you to remortgage your house, max out your credit cards, and buy every physical ounce you can get your hands on. But the other half, the institutional insiders, the guys who actually move markets, they are quietly setting up the biggest bull trap of the decade. They want you to buy their bags right here at the top. So what is it? Are we taking a one-way ticket to $100, or are you about to get completely wiped out in an imminent, brutal crash? In this video, I am going to rip the curtain back. I'm going to show you the exact hidden macroeconomic data that the mainstream media is too terrified to report. We're talking about the shocking 4.4% unemployment trigger that just broke the market this past Friday, and the escalating US-Iran conflict that is throwing gasoline on the inflation fire right now, today, on March 9th, 2026. But more importantly, I'm going to show you exactly how to position yourself so you don't become Wall Street's next victim. And if you stick around until the middle of this video, I'm going to reveal the single most important technical indicator, a chart pattern that has predicted the last 3 major silver crashes with 99% accuracy. You cannot afford to miss it. Look, here's the deal. I'm an investor, not your dad, and definitely not your financial advisor. This is my opinion based on deep market data. It's not financial advice. You press the buy button, you press the sell button. Do your own research, take responsibility for your own money, and let's get into the facts. To understand why silver is trading at $84.70 right now, you have to understand the game. And to understand the game, you need to know who the players are. For decades, the silver market has been the ultimate battlefield. On one side, you have the villains, the massive bullion banks, the institutional shorts, the paper market manipulators. These guys don't deal in physical metal. They deal in paper contracts, millions of them. They flood the futures market with paper silver to suppress the price and keep retail investors demoralized. And they've been caught, fined billions. But it's just the cost of doing business to them. On the other side, you have the hero. That's the retail stacker, the smart money, the people who recognize that fiat currency is melting like an ice cube in the desert. But here is where the psychology gets dangerous. And this is where you need to pay very close attention because your brain is currently working against you. Right now, you need to decide who you are. Are you a gambler chasing green candles? Or are you a wealth protector building an impenetrable fortress? Gamblers buy when they feel FOMO, fear of missing out. Wealth protectors buy when there's blood in the streets, and they sell when the gamblers are euphoric. Look at the market sentiment today. Silver hits $84.70, and suddenly, everyone who called silver a boomer rock 3 years ago is an expert. That is the definition of a dangerous market. Listen to me closely. Silver isn't going to make you rich because of some massive mythical Reddit short squeeze. Silver is going to save you because the global financial system is fundamentally breaking in real time. When the masses feel greed, the institutions prepare to strike. They let the price run. They let the retail investors pile in at $80, $82, $84, and then, when the time is right, they dump the paper shorts. Boom, the price crashes back to $60. The retail guy panics, sells at a massive loss, and the banks buy it all back for pennies on the dollar. It is a wealth transfer mechanism, and it happens every single cycle. Have you ever bought a stock or crypto right at the top, only to watch it crash the next day? Be honest. Drop a yes in the comments right now if you've been a victim of the FOMO trap. It's a safe space. We've all done it, but we aren't doing it today. So, if this is a trap, why is silver up here in the mid-80s? Why did we just cross $84.70 as the Asian and European markets open this Monday morning? Because the fundamentals have shifted violently over the last 72 hours. We are looking at a perfect storm of macroeconomic chaos and geopolitical terror. Let's look at the hard data. No opinions, just facts. This past Friday, the U.S. government released the latest non-farm payrolls data. The market expected a steady ship. Instead, we got a torpedo to the hull. Jobs dropped by 92,000. But that wasn't the scary part. The U.S. unemployment rate officially spiked to 4.4%. Why does this matter for silver? Because for the last 2 years, the Federal Reserve has been telling us the economy is strong. They told us they could keep interest rates high to fight inflation. But 4.4% unemployment changes everything. It means the economy is cracking under the pressure of high debt. When the economy cracks, what does the Fed have to do? They have to print money, they have to cut rates. And when the dollar gets weakened by money printing, precious metals explode. Silver isn't just reacting to a chart, it's pricing in the imminent surrender of the Federal Reserve. But wait, it gets crazier. Over the weekend, the situation in the Middle East deteriorated rapidly. The US-Iran conflict has reached a boiling point. When geopolitics get this unstable, massive institutional money flees from risky tech stocks and hides in tangible, physical assets. Gold just hit $5,185 an ounce. Let me repeat that. Gold is over $5,100, but gold is too expensive for the average investor. So where does the retail money go? It floods into silver. Silver is the poor man's gold, but with a much smaller market cap. It takes very little money to move the silver market compared to gold. And the US-Iran conflict has caused crude oil to absolutely skyrocket. If oil goes up, the cost of manufacturing goes up, the cost of shipping goes up, the cost of food goes up. That means inflation is roaring back. The 4.4% unemployment rate tells us we are heading for a recession, but the oil spike tells us we are heading for inflation. What do you call high inflation mixed with high unemployment? Stagflation. It is the ultimate nightmare scenario for the stock market, and it is the ultimate rocket fuel for silver. During the stagflation of the 1970s, silver went from under $2 to almost $50. That is why we are sitting at $84.70 right now. The market is pricing in fear. But here is the critical question. Is this geopolitical spike a fundamental breakout, or is it a temporary emotional overreaction? Because if you buy right now and tensions cool down tomorrow, you will lose your shirt. I'm about to show you exactly how to tell the difference. But first, let me tell you a quick story about a guy named Dave. Back in 2011, silver was on a tear. The macro story was similar. The 2008 financial crisis had just happened. The Fed was printing trillions in quantitative easing, and everyone was terrified of hyperinflation. Silver was flying. It hit $30, then $40, then $45. Meet Dave. Dave wasn't a professional investor. He worked a normal 9 to 5. But Dave kept seeing YouTube videos telling him silver was going to $100. The hype was intoxicating. In late April 2011, when silver hit $49 an ounce, Dave gave in to the FOMO. He drained his savings account. He bought thousands of dollars of physical silver at the absolute peak. He felt like a genius. For about 3 days. By May, silver had violently crashed. It kept bleeding. For the next decade, Dave held those silver coins. He watched the stock market go on a historic bull run, while his silver investment lost more than 60% of its value, bottoming out around $12. Why am I telling you about Dave? Because the guys who are commenting to the moon right now on Twitter and YouTube, they are the Daves of 2026. If you buy silver at $84.70 purely because of a weekend news headline about Iran, you are trading on emotion. And emotion is the fastest way to go broke. Yes, the macro fundamentals for silver have never been better. We have industrial demand through the roof because of solar panels, EVs, and AI data centers. We have a global supply deficit. We have a stagflationary environment, but nothing goes up in a straight line. Nothing. If you want to survive this market, you need to know the exact price levels where the institutions are placing their sell orders. If you know where they are selling, you know exactly where the crash will bottom out and where the smart money is actually buying. And that brings us to the charts. Get your notepads out. We are about to dive into the technicals, and I'm going to reveal the 30% pullback indicator I promised you earlier. All right, pay attention, because this is the part of the video that will actually save your portfolio. Everyone wants to talk about the geopolitical news. Everyone wants to talk about Iran, oil, and the 4.4% unemployment rate. That's the narrative. But the chart is the truth. The chart shows you exactly what the massive institutional algorithms are doing, while retail investors are distracted by the headlines. This is the 30% pullback indicator. It's a combination of two things: the weekly RSI and the distance from the 200-day moving average. Right now, on March 9th, 2026, silver's weekly RSI is absolutely scorching hot. We are pushing into the high 80s on the RSI. Historically, whenever silver's weekly RSI crosses 85 and the price is extended more than 40% above its 200-day moving average, a violent trapdoor correction follows. It happened in 2008. It happened in 2011. It happened during the 2020 liquidity crisis. When an asset goes parabolic based on fear, like this weekend's US-Iran escalation, the smart money doesn't buy. They sell into the strength. They are setting their limit sell orders at extreme psychological resistance levels. We are hovering at $84.70. Do you really think it's a coincidence that the market is stalling right before $85? The bullion banks are sitting at $85 and $90, with massive short positions. If the geopolitical tension cools off even slightly, if one peace talk is announced, or if the Fed signals they aren't going to panic cut rates, those banks will dump millions of paper silver contracts onto the market. And if that happens, silver won't just drop to $80. It will slice through $80 like a hot knife through butter. It will crash down to the $65 to $70 range to wipe out all the late buyers. But here is the $1,000,000 secret. A crash to $65 is not the end of the bull market. It is the ultimate gift. It is the exact entry point the smart money is waiting for to load the boat before the real, fundamental run to $100 begins. Let me show you exactly why $100 is mathematically inevitable. Forget the noise for a second. Let's look at the ultimate law of gravity in the precious metals universe, the gold-to-silver ratio. Right now, as we speak, gold is trading at a staggering $5,185.80 an ounce. It is breaking all-time highs like they are made of glass, driven by central banks hoarding it to escape the US dollar. Now, grab your calculators. If you take the price of gold and divide it by the price of silver, you get roughly 61. That means it takes 61 ounces of silver to buy 1 single ounce of gold. But historically, geologically, silver comes out of the ground at a ratio of about 8-to-1. And during massive precious metal bull markets, the ratio doesn't stay at 61. It compresses violently. In 2011, it hit 30. In 1980, it hit 15. Let's be incredibly conservative. Let's say the ratio just drops to 40. The institutions stop manipulating it, and silver just plays catch-up to gold's current price. If gold stays exactly where it is today, and the ratio hits 40, silver is $129 an ounce. $129. And that is without gold going any higher. But it gets better because silver has a superpower that gold doesn't have. Gold just sits in a vault looking pretty. Silver is consumed. We are currently living in the largest silver supply deficit in recorded history. Every single solar panel requires silver. Every single electric vehicle requires roughly 2 ounces of silver. Every single switch, circuit breaker, and AI supercomputer motherboard requires highly conductive silver. The world is electrifying at a record pace. AI data centers are sucking up massive amounts of energy and infrastructure. Meanwhile, the silver mines in Mexico and Peru are exhausted. They are pulling lower and lower grade ore out of the ground. We are consuming hundreds of millions of ounces more than we are mining every single year. The above-ground stockpiles are being drained. So listen to me. Silver isn't a get-rich-quick meme stock. Silver is a don't-go-broke necessity. It is the most critical industrial metal of the 21st century, masked as a monetary metal. When the industrial deficit collides with the stagflation macro environment of 4.4% unemployment and exploding oil prices, $100 isn't a pipe dream. It's just a pit stop. So we know the geopolitical news could cause a short-term trap, and we know the long-term math points to $100 plus. How do you actually play this today without getting wrecked? Here is the smart money playbook. This is exactly how the 1% are trading, this $84.70 level. Rule number 1. Do not chase green candles. If you have 0 silver, do not dump your entire life savings in today at $84.70. You are buying into a massive geopolitical premium. Instead, use dollar cost averaging. Buy a small position now so you have skin in the game, but keep heavy dry powder, cash on the sidelines, to buy the violent dips when the RSI resets. Rule number 2. Take free rides. If you've been holding silver since it was $25, $30, or $40, congratulations, you are up massively. Do what the institutions do. Take a little bit of profit. Sell 10% or 15% of your stack here at $84.70. Recoup your initial investment. Let the rest ride risk-free. If it crashes to $65, you have cash to buy back in. If it goes to $100, you are still wealthy. That is how you remove emotion from the game. Rule number 3, know what you are buying. If you are buying paper silver, like the SLV ETF, understand that you do not own silver. You own an IOU from the very banks that manipulate the price. In a true systemic crisis, paper contracts can be settled in cash. If you want true safety from this insane inflation and geopolitical chaos, you buy physical bullion, coins and bars in your own possession. Or, if you must use the stock market, look at physically backed trusts that actually audit their vaults, like PSLV. Again, this is my personal playbook. I'm sharing how my brain works and how I read the data. This is not financial advice. You are the CEO of your own portfolio. Do your own research and manage your own risk. We are entering a phase of the market that most people alive today have never experienced. We have war in the Middle East. We have a cracking US labor market, with unemployment officially hitting 4.4%. We have oil prices threatening to trigger an inflation wave that will make 2022 look like a warm-up. The institutions know the fiat currency system is trapped. They are buying gold at $5,185. They are silently accumulating silver, and they are using the media to keep you confused, scared, and paralyzed. The window to position yourself is closing. Whether silver takes a quick dive to $65 first or rips straight through $100 next week, the ultimate destination is higher, much higher. But you cannot navigate this alone. The algorithms are too fast. The news cycles are too vicious. If you want to survive and thrive in this exact market, you need to be subscribed to this channel. Hit that subscribe button right now and turn on the bell notification. I am going to be tracking this $85 resistance line every single day, and I will alert you the moment the technicals flip. And right now, I want to hear from the smart money in the room. Go to the comments right now and tell me, what is your ultimate sell target for silver? Are you holding for $100, or are you never selling your physical stack? Drop your price target below. I am reading every single one. Protect your wealth. Do not let the institutions steal your bags. Stay sharp, stay disciplined, and I will see you in the next video.